Good morning, Trade Pros. Sound check 1 2 1 2. Let me move this camera, just adjust a little bit, and let's get started. I got a lot, a lot on the docket today. We're probably not going to get through it all, but the market is down a lot. It's down to almost the prior lows where we started rallying off of, and I can't help but think how yesterday we talked about the fact that the government shutdown being over is a buy the rumor, sell the news type of event. So when there was talk about it last week, when it was getting closer, it was a buy the rumor moment. And then the moment that the government shutdown actually concluded was a sell the news moment. And there's been a lot that's happened since. It's not just that, but we are kind of also nearing some really high or structural support lows here in equities that are very, very important. So we'll talk about all that and much, much more. We have a lot. All right. So global tone is risk off this morning. I mean, that shouldn't be a surprise to anyone. The mood worsens. Global equities are lower. Stocks in Europe are down 1.1%. That's STOXX. That's the index. All right. Everything across the board is down in Europe. In the U.S., 0.4% lower on S&P. NASDAQ is 0.6% lower. The dollar is steady. Gold is flat. Surprisingly near 4,160 an ounce, despite the fact stocks are selling off. Gold isn't catching much of a bid. All right, it's still consolidating. It's taking a break. It's had a breakneck pace of a rally the last couple months. All right, oil's up 2.6% after strikes on Russia occur. So that kind of puts instability in the energy market. So oil is up. All right, Bitcoin's 2% lower, and that's kind of where we are. There's a lot kind of weighing on the risk tone today. There's a slowdown growth in China. All right, UK fiscal uncertainty, and one of the biggest things here for the S&P is renewed Fed hawkishness. And a hawk in the Federal Reserve speak is, a hawk is a hawk, but it's a bird. But in Federal Reserve speak, a hawk means they want higher interest rates and they want less accommodating monetary policy, which means less favorable to the stock market. And, traders now, based on the rate hike odds, there's actually futures that show you what the likelihood of the probability of a rate cut is or a rate hike. If it's called Fed Watch Futures, if you just put that in Google, you'll be able to keep track of this on a daily basis. All right, traders are slashing the odds of a December rate cut from the Federal Reserve to now below 50%. Just to put that in perspective to you, it was almost 70% before the last cut. Last cut was a foregone conclusion, but the second one was like 63, 65 on the top end. Now we're under 50%. So that's a marked and significant change in the expectation for rate cuts for December. All right. We also got a string of monetary policy officials say that they're wary about inflation, and they voice skepticism as they were speaking in the last couple of days. That's putting increased probability that there won't be a rate cut, and that's an expectation. It's not a done deal. You never know. Things could change until December's meeting, but we're very close to it now. All right, in pre-market movement, large caps are doing really good. Small caps are getting destroyed and doing abysmal, but the large caps and the Mag 7 are rescuing the market. All right, Apple's still down 0.5% though. They'll cut App Store commissions for mini apps from 30 to 15%, which is good for developers, bad for revenue. Amazon's down 1.7%. No specific news there, just down with Mag 7. Google's down 2.5%. They submitted for remedies to the European Commission after its 2.95 billion ad tech dominance fine. Meta's down 1.6%. Microsoft's down 0.5%. Nvidia down 3%. Just part of the broad semiconductor sector weakness this morning. And there's a lot of bubble talk that's been happening the last week and a half. It doesn't really assure markets, and they're starting to sell off. All right. Tesla's down 4%. It's just down along with the weakness of Mag 7. Mag 7 not doing very good. This morning, the U.S. said that they're preparing tariff exemptions to ease food inflation. So this is part of President Donald Trump's push to make food cheaper, and they are working with Argentina, Ecuador, El Salvador, and Guatemala to reduce costs by way of trade agreements and restructuring fees. So it's a positive. I don't know how quickly that's gonna make an impact, but that's something that you have to know. So from market perspective, that's a positive. Let's see what else. And kind of the summary for today is, oh wait, not yet. This is very interesting. So a lot of times I dig through reports, and Morgan Stanley is a company I really actually like. I like their research and analysis. They're not always right. I'm not always right. You're not always right. None of us is always right. But it's cool because it just gives you depth, and it gives you data, and it gives you kind of storylines and narratives. I get access to a lot of research, probably over $50,000 of monthly costs in research I have access to. So I get a lot of reports. I like to joke I'm a hoarder of information and data. But yeah, Morgan Stanley warns that the speculative stocks face more downside as momentum unwinds. And they don't think the momentum unwind is complete. They say hedge fund leverage remains extreme with AI and tech positions still crowded. So here comes Morgan Stanley talking about crowded. They're going on to the crowded narrative of AI being a bubble. They say retail flows mirror hedge funds, heavy in NVIDIA, heavy in Tesla, heavy in Meta, leaving small caps neglected. This is what Morgan Stanley's saying. Small caps getting neglected. It's so funny. It's like that little brother. You get out of here, man. Nobody wants to play with you. Retail favorites lag NASDAQ by 15%. All right, so it's kind of showing that there's a lag or decrease in speculative appetite. And whether that be people are running out of money to put into these stocks, whether that be people are saving money for the holidays and not putting in the regular amount. I don't know what it 100% means, but it does mean this. Retail is starting to lag, and I think they're out of money. I think they've been buying. And for me personally, I don't like to tell people what I do outside of YouTube. It's so funny because on YouTube, I'm out here pushing the message. And when you meet me in person, if you don't know who I am, and they say, what do you do? I say, I'm just in the markets. And hopefully, I hope to God they don't ask me any further follow-up questions. I hate it. I hate talking about the stuff in person. It's so weird. But when they do ask, like, okay, what kind of job are you in? If they do probe me a little bit more, I do tell them I'm a trader, and people think it's so cool. They're like, oh my God. And this is how I know retail is running out of money. There's two kinds of responses people typically have when they find out I'm a trader. The first one is, it used to be like awe and shock. Whoa, you guys actually exist in the real person. I thought it was just me on the computer. But that's not as often anymore, because nowadays everyone is in the market. I'll tell you the response that really kind of gets me knowing that the market is primed for a bit more of a sell-off. When they say, hey man, that's super cool. You know what I just bought? I bought XBACLD on like the Vancouver Minerals Exchange. And it's such a cool company, man, because now they have like 12 different mines. And these mines are pumping. They're pumping, man. There's so much gold in these mines. Oh, my God, buy it. And it's cool, but I think to myself, oh, you're telling me about it because you no longer have any money. Because if you had more money to buy the stock, you wouldn't be telling me about it, would you? You would be buying it. But since you ran out of money, all right, the next best thing is to tell me to buy it because your long position needs a buyer. Otherwise, it's going to go down, right? And I understand that as a trader. Many people don't understand that in the locker rooms of hockey rinks in South Florida when they talk to me, or outside in the wild when I meet people. I'm starting to get it a lot. I'm starting to get recommendations, pseudo recommendations from people whose opinion I never asked for in places outside of gathering areas for trading crowds like us. So watch out. That's up to Morgan Stanley. Emphasis and story is my own, but that's what Morgan Stanley thinks. And this is the most important part, I think, is the street is short gamma, and that adds fuel to volatility. Okay, and before we go into the trade plan, I want to explain gamma a little bit to you because some people don't understand gamma, and gamma is very important. So gamma measures how quickly your delta changes. All right, so delta is your rate of change for options, especially. Now let's talk options for a second. As price moves of the stock, if the underlying stock moves $10, how much does your option move? All right, that's delta. But if your price goes from $10 to $15 on the underlying, all right, what percentage does delta change in response to that $5 additional? Yes, your delta will change according to the new underlying price, but it won't change in a linear fashion. That non-linear fashion is gamma. All right, it tracks the rate of change on the rate of change. It's the delta of delta. It's not actually that complicated, right? It's like if you think about it on a daily basis, if you take a shot with a hockey stick or you throw a baseball, all right, it's tracking the rate of change as it slows down, right? But it's also the rate of change. It is kind of complicated. It is kind of complicated. It's the rate of change on the rate of change. It's the delta of delta, aka gamma. So if you're long gamma, okay, this is like most option buyers, this is retail. Your position gains delta as price moves in your favor. All right, you profit from volatility basically. But if you're short gamma, and this is most option sellers, delta hedgers, hedging client flow. If you're short gamma, your delta moves against you. All right, forcing you to chase the market. So what happens when you're short delta in a situation like this? Then we're going to get into the options level. Then we're going to turn around and do the trading plan, okay? When the market rises and you're short delta, you've got to buy to stay hedged, okay? And you got to understand, if the market is going up, all right, and you are, the market is going up and you're short delta, all right, you've got to buy more of it just to close out that short delta. And why? Because you don't want to be short delta. Your profit isn't from speculating in direction of market. Your profit is from moving contracts to retail between yourself. It's opening new contracts. It's market making. It's a whole different ball game. You don't want to be directional. You're spending your entire life and energy and money building models that are delta neutral, gamma neutral, and the speed to which you get gamma neutral oftentimes is the difference between being a profitable market maker or an unprofitable one. So when you're market making in options, you have to kind of hedge your gamma. So as prices go up, it forces you to buy more of the underlying product. So for options on the ES futures, if prices are going up and you're short gamma on the S&P 500 options, for example, you got to buy more S&P 500. If you're short gamma on Apple options and the Apple is going up, you got to buy more Apple. And then as it drops, you have to short more Apple. So it basically exasperates your tendency to do something in the direction of the trend. Your short gamma, market's ripping, you got to buy. Your short gamma, market's slipping, you got to sell. And I think this was happening. We were short a lot of gamma. It's opening up the downside on the S&P 500. All right, it puts volatility. All right, and it kind of puts in a sell low, buy high dynamic. And it's okay for those people because they're just closing out a hedge. They're not speculating. So how does this help for us? This is really useful for us in order flow trading. All right, because think about this now. If you don't have an aha moment right now, I want you to never come back to this channel again. No, I'm just kidding. That's kind of, please come back. I'll explain it again. But get ready for an aha moment. So if you're short gamma and you know that, and today we know that, we've known that for the last couple of days, that dealers have been short gamma, all right? If we know that and then we're seeing the prices go up, what happens? What is the moment that's going to reverse that upside trend? Think about it for a second before you open your mouth or type. You can't really open your mouth. You can. I just can't hear you. What do you think would happen? Think about it. Price is going up. A lot of buying. What would have to happen for the price to generally reverse? Well, you have that capitulation, blow off top buying, don't you? Prices are going up. All right, they're going up, they're going up, they're going up. And then all of a sudden we got a gamma hedge, throw this buy order on the market, at market, start buying the crap out of the underlying product. It's all stocks, indices, everything's going up. And then you're buying, and then the more it goes up, the more you have to buy. So it's this self-perpetuating like chase to the upside. And then all of a sudden, everyone just dumps all their orders on. You know, one little capitulation moment, volume's weak, or you get that moment and it doesn't even go up. That's the reversal. So when you're short gamma, the trends will extend longer, like we're seeing right now behind me. This sell-off is deep. All right, it'll extend lower and it'll extend higher because it already has more rocket fuel in the ship. All right, and we are short gamma, so buy that token. Careful, because as it sells off, you get deeper selling. If you have a nice little level here and you're like, well, my little level's cute, I want it to fall here, goes right through it, comes back above, and you're like, oh my gosh. Well, you can't do anything about it because your level doesn't really mean anything to somebody who's trying to delta and gamma hedge their position. They don't care about your level on S&P 500 at all, zero. They give zero, you know what, about this cute little level you've drawn for a 2 contract position when they got to gamma hedge 1,000 contract position that they have. All right. So that's that. On that front, call wall is 67.55 today. Put wall at 66.05. I'll show you that on the chart. So we're going to be anywhere in between there is going to compress volatility a little bit. Anywhere above and outside of that, it's volatility expansion. Expect some choppier trade today. I think as we find the low, if we do find the low, now let's build the trading plan. I'm going to turn around. All right. You're going to lose me for a second visually, and then you're going to gain me back. And not that. Here we go. Morning, Prashant. King Kong. I like that. Marco, morning, brother. Happy Friday. And Steven, good to see you again, too. It's been a long time, Steven. And I appreciate you for coming out. All right, so, look at this light in the back. Whoa. It's like a little halo. I do not deserve a halo, guys. Okay, so what the heck is going on? Okay, well, whatever. It doesn't matter. Okay, so here's where we're at. This chart here denotes or shows, I don't know why that's my term today, but 67.50 is the call wall, which acts as a resistance. And then the put wall, which acts as a support at 66.05. All right, those are the 2 levels we're starting with. There's just reference levels. They look more important than they really are. J-Rad, good morning. The balance grind, howdy, partner. So here's where we're at. Okay, we were pretty bullish coming into these lows at 66.70. The first time around, we said we're going to get a little bit of an upside. Every time you look for upside and the upside happens, you don't know if it's a buy stop run, meaning flushing shorts out of their position, or the renewed run to new all-time highs. There's no way to know. A lot of people will tell you they know better. We don't. Nobody knows better. But now we see that this upside pretty much in the last 24 hours has literally just been given up. So I talk about these levels daily, but let's put this into context, because so many people are looking for the secret sauce, and the secret sauce is right here in front of your eyes. It's on this chart. All right, so look, we get in here into a low, which I don't know, what's the low? 66, like 53-ish. All right, and that's on November 7th. All right, that's roughly a week ago. So one day, because these yellow lines here represent one day, right? And then this is the next day. This is a 24-hour difference between the yellow lines. So one day we bottom out. Second day we rally. Third day we rally, but late in the afternoon, nice bullish days. Fourth day, not so good. We get a little bit of selling off. We can't break that prior top. So read price action with me here. All right, you have the fourth day, but you have 1, 2, 3, 4 extensions across 4 days on the upside. On the fourth day, you can't really crack that top. It's not a problem. It just means it's a pullback. But this pullback shouldn't bring you this far to the low. I mean, look, I could. It doesn't mean the upside's over. I'll talk to you about the plan in a second, what we're going to do here. But it shouldn't go that deep. You don't want it to go that deep. But it does go that deep. And the thing about it is that it goes that deep in one freaking day. All right, this is the market is giving you the things you're looking for. You want to know what's about to happen, or you want to know how the market is positioned, what the bias is. None of this is a secret. It's a secret in plain sight. It's buried. So you have 4 days of upside erased by 1 day of downside. What do you think? Who do you think is in control? Well, I'll tell you this. These buyers have what my friend Anthony Drager calls grapefruit eyes. Like, what the heck is going on? The buyers of the last 4 days or the last week are just waking up this morning in disbelief. Like, we worked a whole week to get this rally up to 6,900. All right, we couldn't go to a new all-time high, and we go down to 6,700. So that's 200 points lower in 24 hours. It's not good. But here is the saving grace. This low is everything right now. all right, on today's session. And this low is pretty far away. So I think at some point we test it, all right, or we don't, and we just rip upwards and we just keep going over the next few days. But it's Friday, all right, gamma is short. There's a lot of nerves in the marketplace. Many traders aren't going to trade too late into the session today just because it's Friday, and they'd rather go and do something more fun. So it's going to be a little more choppy. I'll be honest with you, despite the opportunity here, if there was one day you wanted to take off, this would be the day. It would be easier to come in on Monday and to say, okay, what happened near these lows? Oh, all right, we rebounded a lot. Okay, let me take the torch and start buying. Or we sold through the low. All right, let me take the torch and start selling on rallies. It would be much easier to do this job on Monday. I'm going to be 100% honest with you. I don't always say that. But if you're going to stick around and beat your head off the concrete with myself and the rest of the trading room and try to figure this out, this is what I think we're gonna see. If we come down into the 66.77, which is the overnight low, and 66.70 area, okay, and we break below it, I think you're going to start to get the short gamma unwind. You're going to get a lot of selling. Stay away from buying lows in today's session when it's dumping, okay? But if you come in and you hammer out a low at 77 or even lower at 66.70 and it can't go down and you're getting your order flow activity happening, a lot of selling, market can't go lower, we're kind of have some buy stops to take out going into the weekend, don't we? And I think the closing price could be around the middle of this whole chop into going into the weekend around 67.80. All right, I think this is kind of the sticking point, the middle of a lot of trade these last couple weeks. To kind of go in, if we do rally, just stick there and just close out the session. Be very poetic. All right, so the plan, let's put it into real context now. Somewhere here, there's going to be a low buying opportunity. It could be here or it could be below it. The problem with this is you're catching a falling knife. You want to see, one, a structural shift and a support being formed by chart patterns, and two, what you want to see is the order flow moment of when to pull the trigger. All right, the next thing is going to be is if this thing rallies up to the 67.40, there's going to be a really good selling opportunity here for a short, because I think this is how it's going to go. I think early morning, we're going to catch a bid, okay? We're going to take out some people's buy stops. We're going to get to the 40 and 50. We're going to get everyone excited. We're going to get everyone buying. We're going to get everyone long. We're going to get everyone stuck. And then we're going to make this push down, all right, to run for the low. Whether we break it and continue going or we don't is something we find out in a couple hours from now. We shouldn't be in position to make that call now, but I would love to get a short first this morning. So I'm watching for upside. Those are the two trades. Either get a lot of people jammed up at the lows and we buy it, or wait for these like 40 to 50s, sell them here when you have the right order flow moment for some a push lower, and find out. Be on the team to find out, are we going to take out the low or not? That's the trading plan. And if you're looking for an excuse to take a day off, I'm going to tell you today looks like one of those days. Simply because of where we are and how quickly we got down here. And I would love today to be a day of information gathering rather than trades. Today, I think, is more important for info than for position. All right. And Monday, I think position goes. J-Rad, you're most welcome. Did it make sense for you, sir? Gamma. We talk a lot about it, and I just wanted to kind of do a little primer, morning market update to get you up to speed to why it matters for dealers. All right. And most people, when you're looking at the other side of the same book of business, right? You know, retail's buying, which is great, but the institutional and the market making is selling. Somebody's selling you those options. Not all of them are being bought from sellers, so you have to make new ones, which is called market making. And that open interest is important to kind of know where the levels are they're going to chase. It's still a presumption, right? It's still all a guess. Nothing's guaranteed. I love you guys so much. I've had a great week with you. Thank you so much for tuning in. Next week, we have our Black Friday sale kicking off. I hate the word sale. I really do. I hate discounting our product. I think we bring so much value. But we got something very creative for you this year. I love you all. Have a great weekend. If you do stick around and trade the markets, keep that risk tight. Manage your risk. Trade like a trade pro. And if you do decide to take the day off, then have a great day. I'll see you on Monday and a great weekend. And I wish you all fantastic weekend, good re-energizing time with your friends, family, and loved ones, and activities, doing the activities you love. Take some time for yourself this weekend, guys. Unwind, relax, bring your soul back to par. All right, Ken Ludlow, I appreciate you. Thanks for the info this morning. Paulie, So thanks for all the value you bring in your podcast. Oh, Paulie, that's nice. Thank you so much. I appreciate you. We got a lot of great stuff. If you ever wanted to recommend some stuff, Paulie, always let me know. All right, you guys can hit me up too. info@tradeproacademy.com. Some suggestions for the podcast. And yeah, I got you guys. Take care. Have a great day. Bye.